Hello everybody, and thanks for tuning into the Night Business Talks podcast. So today we're reposting a earlier YouTube video that was entitled ERC Scams, okay? The reason why we're reposting this is because it continues to be a significant issue with employee retention credit scams. And so we wanted to just go through with you a recent IRS FAQ, frequently asked question post that they posted on their website, which is their strongest condemnation so far of a lot of the ERC scam issues that they're seeing out there, and the other professionals and CPAs and tax people are seeing out there as well. And so I wanted to just go through that real quick with you and explain some of the key things that they're saying you should look out for. Okay, so this is directly from the IRS's FAQ, their strongest kind of warning signs that they've sent out so far. And so I want to just kind of read a few of these to you. We'll also post the link to this entire FAQ on the video, so definitely go check that out and take a look through there, okay? So some common warning signs of aggressive ERC marketing to watch out for, okay? Now I do apologize, I'm reading this, so I make sure I kind of say this the way that they say it, okay? So I don't want to paraphrase here. Here's a list of 3, 4, 5, 6, 7 items that they say are warning signs of aggressive ERC marketing to watch out for, okay? First one, unsolicited calls or advertisements mentioning in an easy application process or offering a short eligibility checklist, okay? That's one. Statements, number 2, statements that the promoter or company can determine ERC eligibility within minutes. That's hogwash, okay? So that's number 2. Number 3, all right, large upfront fees to claim the credit. That's number 3, okay? Fees that are based on a percentage of the refund amount of the employee retention credit claimed. This is a similar warning sign for average taxpayers who should always avoid a tax preparer basing their fee on the size of the refund. Okay, that's number 4, all right? So that's a key one there, a percentage of the refund, which is what most of these guys are doing. They're anywhere from 10% to 30%, I've seen, that they're charging people to do these employee retention credit claims, I guess you could say. And as I said in this video that I'm reposting, I don't agree that you should be paying anybody that much, for this ERC work, especially if you have a larger claim. If you have a smaller claim, then you could get into that 20% range, 20 to 30% range for the cost of doing it. But if you have a larger claim, like hundreds of thousands of dollars, there's no way you should be paying somebody 20% or 30% of that claim amount in order to get an ERC refund, okay? So some things to kind of think about. All right, and number 5, okay, number 5, preparers refusing to sign the ERC return being filed by the business, exposing just the taxpayer, claiming the credit to risk. Meaning, if you're sending in a refund reclaim, okay, and your name is the only one on the bottom of it, then guess what? You're wholly responsible for that claim. If you have the pay preparer at least listed on there, then that makes them partially responsible, okay, if something comes back as being incorrect or non-compliance with the rules, okay? You're still responsible, don't get me wrong. So you have a responsibility as a taxpayer to understand what you're claiming, and so you're still responsible if it gets disallowed, but you're even more responsible if you aren't relying on the advice of a paid preparer, okay? So that's number 5, excuse me. That was number 5. All right, number 6, aggressive claims from the promoter that the business receiving the solicitation qualifies before any discussion of the group's tax situation. In reality, the ERC is a complex credit that requires careful review before applying, okay? You cannot just say arbitrarily that every business qualifies. They make it very clear in these FAQs that every business does not qualify for ERC. It wasn't like the PPP stuff, okay? PPP was different. Pretty much every business qualified for PPP, okay? This is not something like that. You have to meet the eligibility criteria, which we go through in this video a little bit, and we've also went through another video that we've done on the ERC recently. So check those out for the eligibility criteria. We're not gonna go through it right now, okay? So that's number 6. And number 7, the IRS also sees wildly aggressive suggestions from marketers urging businesses to submit the claim because there is nothing to lose. Hogwash, absolutely hogwash. In reality, those improperly receiving the credit could have to repay the credit along with substantial interest and penalties. The hogwash part was me adding it in there. The IRS didn't actually say that. But just so you know, like, I think it's absolute hogwash, all right? That people are actually saying these things. And unfortunately, innocent people like yourselves who are watching this video are getting caught up in this mess, okay? So just be careful out there. Make sure you are working with the actual reputable professional, not some ERC mill or ERC shop or some place that just popped up and started doing stuff. There are some ERC groups out there that do a good job, okay? I'm not saying that all ERC shops are bad, but there's quite a few that are pushing the envelope and being very abusive in their ERC claims, okay? And you have to be careful not to get tied up in one of those. But to me, the biggest warning signs off of this list are a huge percentage of the refund, and they're not willing to sign your tax returns, okay? If they're not willing to sign your tax returns, that means they're not willing to put their risk on the line, okay? The IRS can't come after them if they don't sign that tax return for helping you get this credit. So you're basically screwing yourself over if you're going with someone who's not willing to sign your tax return. And don't go asking your accountant or CPA to sign it for you when they didn't do any of the work. That's not gonna fly, all right? So that was just an update. We're gonna play the rest of the initial video that we did that will give you some more information. And if you have any questions, feel free to reach out to us. Thanks for tuning in. Talk to you guys later. Peace.
So on to the topic of the day. So today we are talking about ERC scams. I'm getting so sick and tired of all these ERC scams. And if you don't know what ERC stands for, it's Employee Retention Credit, also sometimes referred to as the Employee Retention Tax Credit. So you could hear it as ERC or ERTC. Either way, I'm getting sick and tired of all the scams out there. There's all these advertisers, there's all these phone calls, etc., etc. So we're going to talk about some stuff that you want to be careful about if you're going to claim the Employee Retention Credit. And I'm going to warn you about the penalties and the issues that are going to come if you claim it and you don't actually qualify and you get audited by the IRS and they catch you and they do one of these, just smack you right upside your head. Anyways, stay tuned. Be back in a second. All right, everybody, and we're back. We are back. So thanks for tuning in today to the YouTube channel. Definitely don't forget to subscribe, like, share, tell all your friends about it, or share it with your families, etc. So today, if you own a small business, you're going to want to tune into this because I'm getting so many of my clients who are getting bombarded with messages and emails and phone calls. I'm even getting them myself, you know, and from these various ERC scammers and stuff that are out there, telling small business owners that everyone qualifies for the Employee Retention Credit, and you can get $26,000 per employee, this and that, yada, yada, yada. Okay? So what I'm here going to do today is I'm going to shed some light on some of the most common myths that I kind of see that come about out there. I will tell you that the National Organization for CPAs, called the American Institute of Certified Public Accountants, also referred to as the AICPA, recently released an article that has 13 myths about the Employee Retention Credit. Actually, they call it fact or fiction. So it's myths or facts, depending on what item they're talking about on the checklist there, or the list of items. And it was a good rendition of what some of us as practitioners, as CPAs, are seeing out there. People are definitely taking advantage of the system, and it's resulting in just a lot of abuses of the Employee Retention Credit. And so the IRS is going to come after this, though. They've said, and they actually issued a warning to everyone. Look, it's from the IRS website. All right, I'm going to have my YouTube guy include the link to this article in the notes to this video when we upload it. Employers are warned to be aware of third parties promoting improper employee retention credit claims. That's the label of this news release. Okay, this is IR 2022-183. It was released on October 19th of 2022. Go check it out, people. They're warning you. Do not take an improper claim. The penalties, let me just go to the penalties, for doing this. All right. First of all, you're going to have to pay the money back. Okay. Second of all, you're going to have probably an accuracy related penalty, okay, for filing essentially a false report. You might even have a willful or, if it's bad enough, they could even try to go criminal with all this, okay? So, you're going to have late payment penalties. You're going to have potentially late filing penalties, interest, etc. So there's all kinds of penalties you're going to have on this, okay? You don't want to do this unless you truly, truly qualify. All right, I'm going to tell you the basic principles of qualifying here, but these penalties can get upwards of 50% of the amount that you're claiming as a refund on your 941. So, let's say you're eligible for $100,000 based on what these ERC shops are telling you, and you claim it, okay? And the IRS comes in and audits the claim, and they decide, no, you weren't eligible. Well, they can hit you with penalties upwards of 50% of that, which is like $50,000. So not only do you not get the money, you have to pay the money back, right? But then you have to pay them an extra $50,000, assuming it was a $100,000 claim, on top of that. Who wants to do this? I know I don't want to do it. So I've had to unfortunately tell some of my clients the bad news. Like, I do not believe that you qualify, not one iota. All right, you're in an industry that was not impacted. Your revenues went up. Your revenues had no such decline, or they were steady, one of the two, right? So, you didn't qualify. You were not under some governmental order because you were in essential service. Your whole business is an essential service. So the ones that I think are going to be hurt probably the hardest from this are clients like, so I have a lot of clients that are group homes, for example. These group home clients are getting hit hard because they have a ton of employees that are W-2 employees, and so they have a lot of payroll that they could be potentially eligible for. However, they're not eligible in most cases. Most of these group homes have guaranteed compensation from the government, whether it's from the state or the federal, Medicaid, Medicare. So you're getting some pretty much guaranteed compensations, and that was not impacted by the pandemic. Their revenues in some cases actually went up. The government agencies paid them more money to help keep their employees employed and to give them some more compensation based on inflation and the pandemic and everything like that for the exposure pay and the risks of them continuing to work. Okay, so it's just crazy to me that some of these guys are just being a little bit greedy, probably. I think some of you are being a little bit greedy. You got the PPP, all right? You got, some of these guys got hundreds of thousands of dollars in PPP funds and really didn't need it. Let's just be honest. There's a lot of people who got PPP funds and didn't need it. So it kind of is what it is. It was available. They made the criteria pretty broad based. So take advantage of it. It is what it is. I can't complain too much about that. You're putting yourself at a disservice if you didn't take advantage of the PPP based on how broad they made the qualifications for that one. However, the ERC is not the PPP. Two completely different qualifications. ERC has very strict and very direct, it's easy. I shouldn't say easy qualifications, but it's worded in such a way that it's intended not to be easy to qualify for the ERC, okay? It's not like the PPP where it was like you could make up any excuse whatsoever and you qualify for the PPP, all right? So whereas this stuff, you really have to qualify under one of the criteria, okay? So you've heard it here first, and you've been forewarned that if you take this opportunity to do this and you don't qualify, you might end up with a significant penalty, and you're gonna end up owing the IRS a lot of money. So there we go. All right, now let's talk through some of the myths that we're hearing out there. Okay, one of the biggest, so let me actually, before I do that, let's talk through some of the qualifications. Okay, so to qualify for this, you have to have one of three things occur. There's three things. Okay, you either had to have had a significant decline in revenues, which correspond to the revenues that you report on your tax return. So if you report your revenues on a cash basis on your tax return, then that's the basis it needs to be on when you're doing this test. Same thing if you do the accrual basis. You have to do the same basis that you're doing your tax return to determine this test. Okay. For 2020 quarters, you had to have a significant decline in revenues of at least 50% during any calendar quarter of 2020 tax year compared to that same quarter in 2019. Okay, that's one way to qualify. All right, for 2021 quarters from Q1 to Q3 for all businesses, if you had a significant decline in revenues of 20% or more, then you can compare to 2019 quarters again, not 2020 quarters. 2021 is compared to 2019 still, pre-pandemic. Okay, so if you had a 20% decline in 2021 quarter compared to 2019, then you can qualify during the first 3 quarters of 2021. If you didn't meet either of those tests, then you have to go to the next test. Okay, the next test, it is basically going to say you had a partial or full suspension due to a governmental order. I cannot stress this enough. It has to be due to a governmental order. Okay? You have to have an impact due to the government forcing you to shut down your business or a part of your business. And it has to be a substantial portion of your business. Or I should say the word that they use is a more than a nominal impact on your business operations. So your business operations were affected at least, I think, 10 to 20%, somewhere in that range, is the qualifiers that they are using for determining a nominal effect, more than nominal effect on your business, okay? So it can't be something that's so mundane that, oh yeah, it didn't really impact me. For example, if you're eligible or able to do your work wherever you are, like a lot of professional service firms are, you are not going to qualify under the full or partial suspension tests, okay? Because if you can still continue to do work from home, I don't care what you say, you're not going to qualify for that test, all right? Unless there's some other non-service-based component to your business activities, you're not qualifying for this test, okay? So I don't see how people, and if you're considered an essential service, a lot of states were using this term essential service when it comes to the government orders. Yeah, you're probably not going to qualify for this, okay, under the full or partial suspension. So the governmental order has to have had a significant impact on your business, all right? A significant impact on your business that resulted in you having a detrimental impact, okay, of some sort. So that's the second test. If you don't meet that test, there's one other test that you might be able to meet. And this is only for businesses that are called recovery startup businesses, okay? And if you started your business after February of 2020, I believe is the deadline for this. If you started your business some date after February of 2020, okay, then you might be able to qualify under the recovery startup business version of the ERC. And it's only eligible for Q3 and Q4 of 2021. Q3 2021 and Q4 2021 are the only 2 quarters that you can do this third option, which is the recovery startup business, okay? And if you do qualify under this third option, all right, then you can take up to $100,000 ERC claim, which is $50,000 for each quarter, okay? So $100,000 for both quarters of Q3 and Q4 of 2021, again, based off your payroll and stuff like that. So although you can get up to a credit of $26,000 per employee, that's the maximum credit. It depends on how much you actually paid them. Okay, so you're going to get a percentage of the compensation that you paid them, your employees, as a credit. All right, you're not going to get the full amount as a credit. It's a percentage of what you paid them as a credit. Okay, so let's be clear about that. The $26,000 is a possibility, but most employees are probably not making enough to get you up to that $26,000 mark. Okay, so just keep that in mind, that chances are you probably won't get to that level. Okay. So those are the three ways you're going to qualify. Now, with the recovery started business, there's one other word of caution that I want to give you. If you had another business prior to starting this other business, you're not a recovery startup business. This has to be a business that you have to be going into business for the first time. You've never had any other business, or at least you certainly haven't had another business in the last, 5 to 10 years at least. All right. So you don't have any other sort of business. It's the first time you start a business, and you started the business during the pandemic. If you have some other business and you started another business, that's not going to qualify because you were already in business. You already had a business and you're starting another business. Okay. You're not going to qualify under the standard. All right. So you have to be very careful with the recovery starter business to make sure you actually qualify. Okay. So if you meet one of those three tests, yes, you can get a percentage of your credit as an employee retention credit. And the way you do it is you file an amended 941 tax return. I don't recommend that you do it on your own. I mean, yes, you could potentially try to do it on your own, but chances are you're going to get something messed up. And unfortunately, the issue is the IRS takes forever to review these things. So if you mess something up, you're just prolonging how long it's going to take to get your refund. Okay, so that's why I would recommend using someone. However, I do not in any way, shape, or form recommend you pay somebody 20% or something crazy of your return to claim the ERC credit. That's absolutely absurd. I would never pay anybody that much, so I don't think that you should have to pay somebody that much. All right. So there's some people who are charging that, yeah, like I said, 20%. Some people are charging 30% of the amount that you claim. I mean, it's just crazy what these guys are charging for these services. It's not that complicated. Although I think you should get some help to do the claim, it's really not that complicated to where you need to pay somebody that much money. So let's say, for example, you had a $1 million claim, and you're gonna give someone $200,000 for helping you file amended 941s. Are you freaking kidding me? That's ridiculous. I can't even believe that someone would actually do that. I mean, that's like two people's salaries for a whole year, making $100,000 a year. But there are some people out there who are doing that. It's just that crazy. So that's just another thing that I'll say is be wary of someone who's charging that much. Because as far as I'm concerned, when you're charging that much, you can kind of take some gambles. Like, you don't have to be 100% sure that everyone's going to qualify, because if the IRS comes back and denies some of them, you pay the person the money back that you charge them for the fee, and you move on because you've made so much off all the other claims that you did. So I just think it should be reasonable. Whatever you're paying someone to file these claims for you should be reasonable. You're not just paying for their time, though. You are paying for their knowledge, right? But I mean, if you got some massive claim and you're paying someone $200,000 just to do your ERC claim, that's crazy to me. But hey, everyone's their own business owner. They can kind of make their own decisions. So that's just my recommendation. Okay, so let's go through some of the fictions of what's out there, what people are saying. Supply chain issues is probably one of the biggest ones that people are trying to skirt around the whole partial or full suspension due to government order. If you have supply chain issues, I'm just going to say, you take that stance at your own peril. All right. It would have to be a pretty substantial supply chain issue for you to justify taking that as the exception. Okay. Now, there are some legitimate issues that have occurred. So, for example, an auto repair shop where they couldn't get parts to do repairs for vehicles for a long period of time. Okay. In that case, those auto repair shops probably would qualify. They placed orders. They were waiting forever for the orders to come in because the auto plant factories that make all the parts and stuff were shut down for so long, all the assembly plants and everything. Okay. I can understand that. That could have an issue. Auto dealers could potentially qualify as well. Same thing. A lot of the auto plants were shut down for a long period of time, so they weren't getting any new cars, and they probably had orders that they could have filled if they had the new cars. So I can understand that for auto dealers. But if you're like a professional service firm or something, for example, and you couldn't get your office supplies, come on. I mean that can't be a valid excuse. There's somewhere that you could have got those office supplies, right? So just some stuff to kind of, or even if you're like a medical practice and you couldn't get some gloves or something like that, the type of gloves you normally like, or things of that nature. I mean, it has to be something that's substantial, right? I mean, that's not going to necessarily. I mean, it might. I'm not going to pretend to be, no, act like I'm a doctor, but I can't imagine that not having a certain type of glove is going to hinder you all that much. So it has to be something that's substantial. More than a nominal effect on the business operations. Okay, so be careful with the supply chain um, stance that some of these guys are having. Be very careful with that. Okay. Um, let's see. What's another one? Oh, federal orders that you had to shut down. There was no such federal order ever given, ever, during the whole pandemic. The federal government did not give an order that said all businesses or all people had to stay at home or whatever. It was all recommendations. Okay, all recommendations. The only real governmental order that was kind of a mandate was they tried to do some vaccine mandates, and they also tried to do some stuff on the planes and stuff like that. But I mean, other than that, there's really not any federal orders that came out that were mandatory. All right, a lot of those were recommendations. Okay, and the states then decided what they wanted to do on an individual basis. Usually at the governor level of each state, they determined if they wanted to do like a partial shutdown or stay-at-home orders and that kind of stuff. Okay, but if you take the full or partial suspension option to claim the credit, make sure you have that documented. Make sure you have a copy of that order in your records. Make sure you know what the time frame is. Oh, by the way, you can only claim the ERC under that method for the time period of the actual order. So let's say, for example, in California, probably a bad example because they were under order for a long time. Let's say, I don't know, Colorado. I don't know, I'm trying to think of somewhere. Maybe Missouri. I don't know. Let's just say Missouri. All right. They had an order from June of 2020 to September or to August of 2020. Okay, let's just say June 1, 2020 to August 1 of, or August 30th, 1st of 2020. Okay, so that 2 month time period, I'm sorry, that's 3 months, technically, my bad. Do that math in my head. So that 3 month time period is the only time that you can claim, not the full calendar quarter. All right, if the order was only for 1 month, you'd only be able to claim that 1 month. So let's say it was June 1 to June 30th. You'd only be able to claim the month of June wages as the ERC. You can't claim the whole quarter like you can if you have a decline in revenues, a significant decline in revenues. Okay? So, and I will tell you, I have another video that I did a while ago. We'll see if try to have him link that video here as well. That goes more specifically into the criteria for qualifying for the ERC. So I got another video that goes into details on some of this stuff, right? So I encourage you to go and look at that video if you haven't seen that yet. My business qualifies for ERC because employees and clients had to wear masks. No, that doesn't work, all right? It just doesn't work, guys. Come on. No, it's not going to qualify for ERC. You can't take the ERC for owner employees either, all right? If the owner employee owns more than 50% of the business, okay? You can't do that, all right? So be careful with that. You have up to 3 years to do your amended 941 after the original form was due, basically, okay? So you have some time to get this done, but you are running low on time, about 1.5 years still left for certain claims for 2020 tax year. Okay, so kind of keep that in mind that if you have some stuff for 2020 tax year, you might want to try to get on that. But for 2021, you still have plenty of time to get these done. Okay, so we're gonna, like I said, we're gonna list a link to the IRS article or the IRS press release. We're gonna list a link to the IRS or AICPA myths, fact or fiction. Okay, and we're gonna list a link to the other YouTube video that has the more detailed specifics on the whole ERC qualification. So, I mean, just be careful. That's all I can say, guys. Just be careful. Don't just trust what somebody else is telling you. Read into it yourself. Understand what they're saying. Make sure you qualify. This is a lot of money for a lot of businesses if they do qualify. So take some time and effort and actually understand what's going on. Don't just blindly go into it, because if you do that, you're gonna ultimately end up getting your head smacked by the IRS potentially. That's all I can say. Once again, happy Veterans Day to all the veterans, and thank you for your service. And hopefully you enjoyed the video. And we'll be back with a lot more in the near future. And hope everybody has a good day. See you.